Hello everyone, welcome to the trade breakdown on EU. In today's video, we'll be breaking down two trades and I'll also be showing you the answers to the test that I gave you yesterday. Now, as we all know, we learned about market profiles and key levels this past 2 weeks, right? And I gave you a logical framework for it and showed you how you can look at these concepts with a logical perspective. But it doesn't end there. You also need to be shown how you can apply these concepts in the live markets. And that's where these breakdowns come in. You're going to see how I use that knowledge to form trade ideas. And I'm going to show it to you in these breakdowns. That's the main purpose of these breakdowns, right? Now, these two concepts weren't the only one that led to this idea, but they certainly did play a huge role in it. So I'll be making sure to explain these trades based on these concepts. I'd also touch on the other ones too, but the predominant focus is going to be these two concepts, right? Now, I'll be showing you what was my higher time frame thought process behind these two trades and what were the factors that led to this trade idea. So let's get in the breakdown. Now, we're gonna start off with the daily time frame because that's where I found my buys and determined my drawn liquidity. And then I refined them down to the 4-hour time frame and framed a trade idea there, right? Now on the daily chart, you can see right here that we've got these equal lows right here. And what we did is took out these lows right here with this candle, right? Now, based on the rules of range trading, we know that when one side of the range is purged, our drawn liquidity becomes the opposing 50% of the range and eventually the opposing end of the range, right? This is basically how range trading works in a nutshell. Now, after one extreme of the range was purged right here, what happened is that over the next 2 to 3 days, we closed above the candle that purged the low. And basically the candle that had purged the low got engulfed, right? Now, based on the definition of an order block, which I told you in chapter 2, when such a candle gets engulfed, it becomes a valid order block for us, right? Now, you can see right here that the week or the weekly candle opened right here with this opening gap. And on Monday, we formed this ranging candle right here, just above this order block that we formed newly, right? Now, we know that our drawn liquidity is higher, which is this range high right here, right? So based on that logic and framework, we can potentially use this Monday's candle as a CRT and match it with this key level right here in the form of an order block and wait for it to be purged during Tuesday and then use this CRT's high as a drawn liquidity for us on the lower time frames for the rest of the week, right? And you can see right here that is exactly what price did. It purged this low, tested this key level, this order block, right? And then over the next 2 days, it started its journey towards the opposing end of the CRT, which is the Monday CRT's high, right? Now, that being said, let's move on to the 4-hour time frame and see what was my thought process there. So on the 4-hour, you can see right here that we purged this Monday CRT on Tuesday and then immediately reversed from there and closed inside the CRT range. Now you could have traded this 4-hour CRT on the lower time frame as well and could have potentially exploited it, but that's not the topic for today. Now what we are dealing with in this video is the price action on Wednesday, right? Now let me first of all put on the opening and closing times for the daily candle so we can see what we are dealing with, right? So you can see Monday formed the CRT range, right? You can see the opening closing times, and then on Tuesday we purged that CRT range low and closed inside, right? And also tested a key level on Tuesday, which is like the main factor for us. Now on Wednesday, we can expect the price action to take out the opposing end of the CRT. Basically, expecting the Wednesday candle to take out the opposing end of the CRT, right? That's what I expected on Wednesday. But obviously, as we all know, we can't just take an entry right away, right? First, we have to position ourselves towards that drawn liquidity with a CRT. And as an intraday trader, that CRT for us would be on the 4-hour time frame. Now, you can see right here that the Wednesday's candle opened right here and straight away went into a ranging profile with these candles, You could probably see it too. These two candles right here are comparatively smaller than the other expansion candles, which clearly means that on the lower time frame price was inside of a ranging profile. Now, also you can see this price action right here. These consecutive candle down close candles together purged the Monday CRT low on Tuesday, right? And then price closed above these candles in the later price action, right? Now we can use these candles together as a single order block too and use it as a key level. Now the refined version of this order block would be this candle right here, because this was the exact candle that purged the low. But based on a logical framework, we can see that these consecutive down close candles together took out the Monday CRT low and then price closed above them, right? So this price section right here can be used as a key level too. Now the idea and logic behind key level isn't based on pattern or anything, right? The main reason we use such price section as key levels and then we've named them all these different names is because such price section have led to either taking out liquidity, generating liquidity, or filling liquidity, right? And that's exactly why price uses such price action for future reference and test it and expand from there, right? And that's what we call key levels. Any price action that have led to either taking out a liquidity, generating liquidity, or filling liquidity will always be used for future reference. And just for the sake of simplicity, we call such price action key levels and we've named them all these different names. For example, if you take an order block is basically a candle that have taken out liquidity, meaning it has a proper narrative behind it. This candle right here has taken out liquidity, so we can use it for future reference and price can use it for future reference to find support and then expand from there. Similarly, if we take the example of a breaker block, then a breaker block is basically the high that have taken out the low, meaning it has taken out liquidity. So again, price could potentially use that high as a future reference for price to find support and expand from, and we call such high a breaker block. Even when it comes to an FVG, an FVG is just basically a price gap between consecutive candles, meaning they've generated liquidity on the lower time frame, right? And again, as I said before, price can use such price action for future reference and then turtle soup that FVG and price and find support there, right? That's basically the idea and the logic behind key levels and why they are so important. Now enough with that, let's get into the breakdown. So you can see that this is the higher time frame key level for us, right? And also right here in this condensed price section right here, you can see that these two candles closed above the key level without testing it, which means they've generated liquidity and we can use them as a CRT because they've generated liquidity above a key level. Now let's go down to the 15-minute time frame and see what we've got there. Right here you can see that after opening time we straight away went into this ranging profile right here. And this price section right here is the price section of the first 2 4-hour candles of the day, and these 4-hour candles closed right here just above the key level and didn't test the key level, right? We saw that on the higher time frame. Now based on market profiles in key levels, we can see that we formed a range just above a key level, and the only two possible outcomes for price after a ranging profile are either an expansion profile or a manipulation profile. But you have to remember one thing, that if we hadn't done all that higher time frame analysis, right, if we hadn't determined our buys and drawn liquidity on the higher time frame, then we wouldn't know to which side or which particular direction this expansion or manipulation is going to happen. The expansion could happen to the upside or it could happen to the downside, right? It could have happened to either of the side and we wouldn't have a single idea about that, and we would be just randomly guessing the direction. But that's not the case for us, and you know why? Because we already determined our drawn liquidity on the higher time frame, on the 4-hour and on the daily time frame, and we have a clear direction, right, towards which the price is drawn to, and that is the Monday CRT high on the higher time frame. So based on the higher time frame analysis that we did before, we already know what our higher time frame drawn liquidity is, which gave us a bias, which gave us a level that we can look at as our draw for price, or towards which price is going to be drawn in the future. So based on that logic, right, we are going to exclude the downside or the bearish scenarios, because price is drawn towards the upside and the drawn liquidity for us is higher. So we're going to remove the bearish biases and the bearish scenarios and only work with the bullish ones, right? Now we are left with another problem again. We know that we can have two possible outcomes after a ranging profile, right? And those are expansion and manipulation profile. Now again, if we hadn't done that higher time frame analysis, then we wouldn't know which profile to expect. Should we expect an expansion profile or a manipulation profile, right? We know that our drawn liquidity is higher, but another problem is that which profile to expect, right? We can have two possible outcomes. So what are we going to do in this case here, right? But again, that's not a problem for us, because we did our higher time frame analysis and we drew this key level on the 4-hour time frame in the form of an order block. And on the lower time frame, we can see that price didn't test that key level, right, and formed the range just above that. So using the same logic over again, right, we know that if price is going to expand higher, first it has to test a key level, right? So based on that logic, we're going to exclude the idea of expecting an expansion profile right away, because we haven't yet tested any key level whatsoever. So therefore we're going to expect a manipulation profile first, so that price tests a key level, and then after that the only possible outcome for us is going to be an expansion profile in the opposite direction, right? Now you just said yourself, we had multiple scenarios that we could have had and expected, but through the help of a logical framework, with the help of market profiles and key levels, and the help of higher time frame analysis, we use a rational logic to weed out or exclude the lower probability or the unlikely scenarios. And at the end, we were left with only one scenario, that is the manipulation profile into a key level and then an expansion higher. That's what I'm preaching here, using a logical framework instead of randomly guessing scenarios out of nothing, right? And that's exactly our aim as a trader should be. Our aim is to use logic to exclude other unlikely and low probability scenarios and only trade the ones that are high probability and the ones that are based on proper logic, right? You're gonna hear me use the word logic over and over again in this CPI, because of how important it is, right? Now right here you can see that we had a manipulation profile after the ranging profile ended, and then right after that we formed this order block right here on the 15-minute time frame, which basically gave me a confirmation that this manipulation profile is about to end, and now we can potentially position ourselves towards that drawn liquidity and trade it higher. And then I took an entry right here at this order block and rode it higher, and right after that we had an expansion profile towards the drawn liquidity. Now again the expansion profile ended here, and we got into this ranging profile again. Now remember, our drawn liquidity is still higher, which is the Monday CRT high, right? So we can now again look for an entry on the lower time frame towards that drawn liquidity and position ourselves. Now after a ranging profile, we all know that we can have two possible outcomes, which are either an expansion right away or a manipulation profile, right? So we're going to use the same logic to see what are we going to end up with at the end, right? But before we do that, let me remind you of TSKO again. We know that inside of a CRT range, we have a sequence of moves after one side of a CRT is purged and before the drawn liquidity is reached. And those sequence of moves are an order block entry, a breaker block entry, an OTE, and the last but not least, we've got the kiss of death or KOD, which is basically the last move or the last turtle soup before the drawn liquidity or the opposing end of the CRT is purged or reached. Now one thing about KODs or kiss of death entries are that they are one of the highest probability moves inside of a CRT range or inside the sequence of TSQ. So whenever you see a KOD, you can potentially regard that as a high probability scenario for yourself, and you can trade that with the right framework and context, right? And right here you can see that we're just about to take this opposing CRT range, but before that we form this ranging profile. But we don't know whether we're going to have a manipulation profile first or an expansion profile right away. So for that we're going to use the logic of key levels and market profiles again. So right here you can see that with this ranging profile we already tested a key level, which is this breaker block right here, or this CRT high on the 4-hour time frame. Let me show you. This candle's high on the lower time frame is basically a breaker, right? And we can use that as a key level. Now one thing you need to remember is that we've already tested an important higher time frame key level with this manipulation profile right here and tested that order block, that 4-hour order block. And now with this second ranging profile we can only at least expect it to test a lower time frame key level, and then we can expect an expansion profile. And in this case we've done exactly that. This ranging profile tested the breaker and the breaker block, and also along with that we had this last turtle soup right here, and after that we can start to expect an expansion here. And you can see right here that we had an expansion after this ranging profile. And the reason we didn't have a manipulation profile is because this ranging profile had already tested a key level. So there was no need for any manipulation profile to happen, and we can just straight away expect an expansion profile right away, right? And the way how I took an entry here is I waited for a model 1 entry, which is this entry right here. This is the candle that dug below this low, and then I waited for it to be tested, and then I took an entry here. So that was it for the trade breakdown for you. I hope you've liked it. This week's chapter is going to be about time frame alignment and time frame selection, and those chapters will cover and clear all of your confusion about time frames and the different styles of trading. Now I need one thing from you, and that is for you to tell me whether you like these breakdowns or not, right? Because I want to see and read your reviews of it and see whether you are taking it seriously or not. You can also feel free to send me suggestions about these breakdowns in my DMs, and I'll make sure to read them and even apply them, right? Now starting with next week, I'm going to start accepting payments for the next month's subscription of CPI. Obviously, if you wish to continue. Next month, we're going to have some really hard topics. We're going to move on to the level 2 of CPI. And we're going to refine this knowledge even more and start adding other important concepts and theories too. So payment for the next month start next week, and you'll have only 5 days to submit the payments. Otherwise you'd be kicked out. Crystal clear, 5 days, right? You can send your receipts and screenshot of the payment to my personal DMs, and once you're verified, you'll be led into the next level of CPI. Thank you.